Hi students, good evening again. We were discussing the concept of cost of goods sold statement. In the previous topic, what we have discussed what is the meaning of the direct material, what is the meaning of the direct labor, what is the meaning of the factory overhead. So I hope you have seen the previous videos. In that videos, we have discussed the basic concept, what is material, labor and factory overhead, what are the main, you can say, the cost element that are included. Now, in this lecture, what we are going to discuss, we are going to prepare the cost of goods sold statement. Why we need the cost of goods sold statement? Obviously, we will discuss that concept also, and how it is calculated, we will do the concept also. Okay, so in the basic cost of goods sold statement, we have three main cost elements are there. So the direct material, direct labor and factory overhead. We have just the assumed value. Let's say that the total direct material, or what we say the raw material that is used, the value is how much? Let's say it is 35,000. So the business has total raw material use, and the cost of that raw material used is how much? That is 35,000. And the second thing what they have is the cost of the direct labor. So it is how much? Again, assumed value 25,000. Then the factory overhead cost is how much? That is the 30,000. So if we add the three items, means the direct material, direct labor and the factory overhead, what we get? We get the total manufacturing cost. Mean to produce these units in the factory or in the manufacturing concern, how much the cost they have borne? The cost they have is the 90,000, which includes the three basic cost elements: the direct material cost, the direct labor cost, or the factory overhead cost. So this is what, this is the total cost of manufacturing. So to manufacture these products, they have a total cost of 90,000, which includes direct material and direct labor and factory overhead. And to just segregate that one, if we add these two costs, that is called as the prime cost. Prime cost means what? Just to produce any product, what we need, the two basic material and labor cost is required. Means whenever there is a production, we need the first of all the raw material. Then we need some workers, some workforce or laborers who will produce that product. So those are the basic or the primary things that we need. So if we add these two costs, that is called the prime cost. In that concept, what we have, 35,000 is the material cost, and 25,000 is the cost of the labor. So if we add these two, it will be how much? It will be 60,000. So this is what, this is the prime cost. But if we have some material, if you have some labor, but if they don't have a tool, if they don't have some factory building or some workshop or all the other facilities, they cannot produce it. It means to convert the raw material with the help of the labor, what they need some premises, they need some space, they need some tools. It means to convert the material into the final product or the finished product, they need the labor and they need the factory or the premises or any other location where they can work. So that's why if we add these two costs, means the cost of the labor and the cost of the factory, so that is called as what? As the conversion cost. That is called what? That is called as conversion cost. So if we add these two, we will get the conversion cost. So it will be how much? It will be 55,000. So the 55,000 is the conversion cost, 60,000 is the prime cost, and the total manufacturing cost, means if we add all these three items, what we get? We get the total manufacturing cost. Now, why we need to calculate this total manufacturing cost? Obviously, every business is for what? It's for the profit earning. So they want to know that any product which they have produced, what is the cost of that produce, or what is the cost of that product. So let's say this business is manufacturing, or they have a factory for the shirts, like some garment factory is there. So they have a total 90,000 production cost or manufacturing cost, and they have produced, let's say, 15,000 units. 15,000 units means 15,000 shirts they have produced. So it means the cost for one shirt is how much? The cost per unit will be the total cost divided by the number of units they have produced. So it is how much? 90,000 divided by 15,000. So it is almost $6 per unit. Means if they are producing one shirt, one piece of the shirt, so that is what they are. Total cost of material, the labor and overhead, means the cost of producing that shirt is how much? That is $6. Then they are selling it. Obviously, they have to sell it above the $6. So they are selling it, let's assume, for $10. It means they have a margin of $4 to cover all the other expenses. So now there's a difference between the cost and the expenses. Costs mainly relate to the production, but the expenses related to what? Related to sell the product, to administrate the product, to have the marketing purposes. So obviously they have produced the shirts, but now they need what? They need some office, they need some marketing people, they need some marketing, you can say the advertisement, they need also transportation, they need the accountant, they need the HR department, they need so many other things for the manufacturing and for the selling. So after the production, whatever cost is there, so that is called normally as the other expenses. So those expenses to cover that one, plus to cover the some of the profit, because they are selling it for what? For the profit purpose. Let's say they assume that they may have a $2 or $3 for that as a other expenses, so they want to get like a $1 or $2 as a profit on that shirt, so they fix a price of this shirt as a $10. The cost of the production is $6, so the $10 they are selling the shirt. It means they are getting a profit, that is $4, but that is not a net profit. That is what? That is the gross profit, because they have so many other expenses to sell the product, because they have a marketing, they have an administrative, they have a general, they have to pay to the bank, means salaries of the workers, accountants, HR, auditors, so many expenses are there. So to cover that expenses and also the profit, they fix a price of $10. So it means why we need the cost of the goods sold, why we need the cost of the manufacturing, why we are focusing on that, because to fix the price of the product, we need to know that how much is the cost. The same thing will happen in the cost of the service, but here we are just working on the cost of the manufacturing unit, the cost of the goods which are manufactured, not for the service. So here it is $6 and they add $4 for the other, for the profits, for the other expenses. So it is $10 they fix the price. For fixing the price, obviously they need to know that how much is the cost. So they add some margin like a 20, 30, 40%, and then they sell it at a specific price. So they fix the price. Now the question is, from where we get this $35,000 amount? So how we have calculated that thing? So this is the cost of what? This is the cost of the raw material, or this is simply the cost of the total material used.